Good afternoon, ladies and gentlemen, and welcome to the ILIKA Final Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be sent an email to notify you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give that your very kind attention, I'm sure we'd be most grateful. And I'd now like to hand over to Steve Boydell, CFO, and Graham Purdy, CEO from ILIKA. Good afternoon to you both.
Afternoon, Mark.
Good afternoon.
Many thanks for the introduction, and many thanks to everyone for having joined this particular webcast. Delighted to have you with us. We're going to talk about our full year results to the end of April 2021. So, business overview. ILIKA is one of the few independent global experts in solid state batteries. You see a picture of our Stereox miniature thin film batteries on the top right of this slide. And at the bottom left, you see a picture of our Goliath pouch cells that are suitable for EVs and consumer appliances. The Stereox cells have been particularly designed for medtech applications and also industrial IoT or wireless sensors. The large format Goliath pouch cells are particularly useful for consumer appliances and also ultimately what will be the biggest market for lithium-ion cells, the electric vehicle market. So why are people interested in solid-state batteries? If you've been reading about the sector, you can hardly have missed a lot of the interesting news flow around this technology. Well, first of all, they're ultra compact, so they occupy about half the volume of a standard lithium-ion cell. And this enables a smaller pack design. So if you had an EV that had the same weight of solid-state batteries in as a normal EV pack, you would be able to have twice the range. They're also tolerant of higher temperatures. So a normal lithium-ion cell will go up to about 60 degrees C, whereas a solid-state cell will tolerate up to 150. And this is really useful not only for industrial markets, where the cell might be close to a particularly high temperature and could be damaged otherwise, but also it allows the designers of electric vehicle battery packs to reduce the amount of parasitic weight associated with the cooling system that would normally keep a lithium-ion cell within its normal operating range. So, most EV pack designs at the minute have got quite an extensive cooling system with a cooling fluid, pumps, heat exchanger to keep it all within that operating range. But if you can go up to 150, you've got the discretion to reduce the size of that cooling system. And then thirdly, they're very fast charging, so they'll charge 6 times faster than a normal lithium-ion cell. So if your normal battery pack would charge in an hour, then with solid state, you can charge in 10 minutes. The other aspect that's becoming increasingly important is the environmental considerations. So currently, we don't actually, as a society, recycle very many batteries. About 5% of batteries are recycled. And this is probably due to the fact that it's quite expensive to do so. So they contain a liquid electrolyte, which is toxic, and that has to be drained away before the battery can be stripped of its valuable components. It can't be chucked into a landfill, and it also can't be put in an incinerator because the cell would burn too intensely and damage the incinerator tubes. So with solid state batteries, you haven't got that toxic and flammable liquid electrolyte, so there's no risk of explosion. And you can also use process technologies that are actually common to say, the mineral extraction industry or the mining industry. So effectively, once you've removed the outer packaging of the cells, they can be reduced to a powder, and then you can put them through standard processes like co-precipitation, in which you can extract the metals and put them back into the supply chain. So how do we make money out of batteries? Well, ILIKA's Stereox business model is shown in this slide here. We've been manufacturing and selling batteries from our pilot line for a few years now. Our Stereox cells are made on wafers. They're made on glass wafers. We actually carry out the wafer fabrication at our facility here in Southampton in the UK. We actually outsource the thinning and dicing of wafers. They come back in and then we stack them into batteries and then form them and test them before sending them out to customers. We're on the cusp of moving into a new manufacturing facility, and I'll come back to that in a moment. Last year we had a very successful placing in which we raised £15 million gross that allowed us to build our own fab. And in that we will be continuing to fabricate wafers, although on a larger scale. So we'll be able to access 70 times the capacity that we currently have with our pilot line. We will continue to use the supply chain, so we'll outsource the wafers for thinning and dicing. But we will form and test these cells before sending them out to customers. But we're not going to continue to build fabs. Actually, the plan for the company is that we license the technology into the larger markets. So once we've exhausted the capacity of our own manufacturing facility, the plan is that we will make the technology available for third-party organizations to access it. So in terms of the Stereox implementation, I hope very soon that we'll be able to organize an investor visit to come down to our facility so that we can showcase it in the same way that we showcased our Goliath pre-pilot line back in December of 2019. But if you were to come down and visit it tomorrow morning with me, we'd have a look around and you'd see that the clean room itself is substantially complete. And by that, I mean that the walls and ceilings and windows and doors are all in place, and that the specialty gases have been routed to the expected site of the key equipment items. The air conditioning units are installed, so we've got humidity control and also particle control, and the rest of the utility infrastructure is in place. We've got a great team that's being led by Paul Maron, our tech transfer and manufacturing director. He's drafted in what we sometimes refer to as the Scottish Mafia, which are often people who have actually had their industrial training as part of Silicon Glen, where there was a lot of semiconductor investment in the 1990s. Well, that expertise is still available, and we've deployed some fantastic guys in the team there to make sure that we've got the right industrial experience to execute on our plans. The key tools, Tool 1 and Tool 2, are actually going through their factory acceptance tests at the minute. Tool 1 across in California and Tool 2 in Switzerland. We've actually been monitoring those factory acceptance tests using video link, and have been reassured about the performance of those tools prior to them being created and then sent across to the UK, which will probably be in the next couple of weeks for hookup and commissioning. We'll stabilize the process throughout the remainder of the summer with a view to starting qualification in Q4. By that I mean process stabilization, followed by making the first batches of batteries for testing. And then we expect that product sales of the initial batches will start in Q2 of 2022. So Steve reliably informs me that we've invested about 2.5 of the 4 million total capex spend on the fab implementation. The remainder will be spent on further tool and equipment sets as we ramp up throughout next year. Of course, the other side of the equation is that we need to balance that investment with adequate commercial progress. We've been continuing to sell evaluation samples to customers that we can supply from our pilot line while all of this construction has been going on. So we've given 16 customers samples from the line. And of course, we've extended our commercial reach. We've entered into nearly 50 NDAs with organizations, about equally split actually between industrial Internet of Things and medtech. We expect the front end sales to come from industrial IoT and then the back end from medtech. And what I mean by that actually is that it takes a few years for the medtech accounts and applications to go through their qualification and approval ready for commercial sales. So while we are supplying smaller quantities of batteries to the medtech industry, the wireless industrial sensors will be the initial customers. And what's been great actually is we've qualified those opportunities and talked to the customers about the size of the markets, the quantity of cells that they're likely to need in the forthcoming years. We've seen that some of them actually in their own right would overutilize the 3,500 wafer capacity that we've got at our facility. And that's great. We expected that to happen, and that will create demand for those licenses that we were talking about in our business model. So in terms of the application areas, in industrial IoT, two broad opportunities. One is around wafer sensing, and this is calibration of processes in the semiconductor industry and MEMS industry. That industry is going through a massive boom at the moment. Actually, there are supply chain restrictions, and you'll have read about the shortages of chips for all sorts of applications that have been brought about by extraordinary demand for people wanting to use the appliances that these chips are built into. So wafer sensing is all about calibrating the processes so that you increase the yield in those semiconductor fabs. Make sure you get as much productivity as possible from them, and that is fantastic when the demand is as strong as it is right now. And then you've got condition monitoring. So we've done a field trial with a wind turbine manufacturer and also actually with networked rail on infrastructure, looking at tracks. And in addition to that, there are opportunities around process equipment in chemical plants, power stations, refineries, applications like this, where the batteries are exposed to elevated temperature. And then on the miniature medical implants, this is a really fantastic revolution, really, that's sweeping through the healthcare industry, where manufacturers of implants are looking to move from a passive, largely mechanical design for their products all the way through to more smart, data-rich products, where the patient gets a much better service from the device that they're fitted with. So in orthopedics, things like knee implants and hip replacements, where you can put in tracker devices that allow the surgeon to give advice to the patient on how they're doing with the physiotherapy that comes after the surgical intervention. And a big part of the success of those types of replacements is actually driven by the post-operative physiotherapy. So being able to track that for the months that follow the surgery is really important. Then nerve stimulation as a replacement for chemical-based painkillers. So as a replacement for the sort of pain relief that people might be prescribed. Sometimes people refer to this as electroceuticals as opposed to pharmaceuticals. And then sensors for blood pressure monitoring, and ophthalmic applications where you put tiny batteries on smart lenses. And of course, it has to be a miniature thin film battery to get a smart lens to work. So that's Stereox. Let's change gear a little bit and talk about Goliath. I think the last 6 months have seen unprecedented enthusiasm really for the EV revolution, and predictions for the quantity of EVs that are going to be on the road in the coming years are stronger than ever. We're seeing substantial growth expected in the sales of EVs. Not only that, actually, but solid state batteries are seen as a technology which is the natural successor to lithium ion cells. On the bottom left here, there's a forecast from James Frith's Bloomberg report on solid state technology that he published a few months ago. And he is predicting by the end of this forecast period that solid state batteries, as shown in green, will be just as widely used as traditional lithium ion cells, as shown in blue. So the sum total of that production is red from the scale on the right-hand side. And then there's another data set actually on this plot too, which is the cost point for solid state. Actually, that's the red line, traditional lithium ion cells in the light blue. And you can see that actually, although in the early rollout of solid state, that there will be a price premium for solid state associated really with the smaller volume of manufacture of those batteries. Ultimately, by the end of the forecast period, you get price parity, and solid state will become the most attractively priced, lowest price alternative for users of cell packs. So there are a number of players, of course, active in this landscape. So the question is, what's different about what ILIKA is doing with Goliath? Well, we're the only company that's actually addressing this problem from the perspective of having functioning, well-defined miniature cells. Most of the other players have come at it from the traditional lithium-ion starting point and trying to turn that into a solid version of a lithium-ion cell. But from Stereox, we've learned how to deploy a silicon anode successfully. We know how to manage interface resistances. We're perhaps one of the organizations that's been working the longest in solid state batteries, having worked for 10 years on solid oxide electrolytes. And we know how to design these composite structures that make up solid state batteries. And also, actually, we've demonstrated that we can successfully scale manufacturing processes, having started with a pilot line for Stereox and now moving into a facility for mass production of that. And of course, we've retained the flexibility to use best-in-class cathode materials because that market is moving quite quickly. There's lots of innovation ongoing with high nickel compositions for cathodes and high voltage cathodes. And it's important actually that we can make sure that our battery structures are compatible with these different chemistries as we move forward. So we've shown some pretty strong technical progress over the last year with Goliath. Having finished the construction of our pre-pilot plant here in Romsey in record time back in 2019, we put that to good use and we started building composite A6 battery structures, showed that we could cycle them successfully, and also that we can get a decent conversion efficiency in those cells. We also this year have focused on making sure that our baseline manufacturing process is reproducible and now we've been able to increase the number of cycles without failure to over 500, and this is expected to increase steadily as this year progresses. In fact, our cycles aren't limited by cell failure at 500. They're continuing to cycle. It's just it takes quite some time for us to be able to generate that data given the rate of cycling. So what does the future look like? Well, we've got about another 18 months of process and technology development ahead of us. For the automotive sector, that will allow us to then make cells available for module, pack, and BMS integration, BMS being the battery management system. And then, of course, in the automotive sector, they use these so-called mules, which are prototype vehicles, which are then driven around the Nürburgring at speed to demonstrate that the packs deliver the performance in an automotive cycle that's required. Low volume production and then higher batch production of the vehicles before they're fully tested and validated, and then we flip into toll or gigafactory manufacturing. And you can see at the bottom there how we have a series of generations of consumer cells and automotive cells as we go through our technology development curve with the associated steady improvement in energy capacity, so performance and power performance. And in terms of the scale up of manufacturing, what we plan to do is, until now, we've been working with our partners in the Innovate UK Faraday Battery Challenge funded programs, so Honda, McLaren, and Jaguar Land Rover, sharing samples and data with them. There is a need, though, to increase the capacity of that facility, and we plan to do that by increasing it a factor of 10 through automation and higher throughput equipment. We just recently announced a collaboration with Comau, which is the automation part of the Fiat group. They've got lots of expertise in factory automation and cell production facilities, so cell manufacturing. And they will help us do that increase in automation, but also get us ready for the deployment of the technology at a mega factory scale. So not a gigafactory, but a mega factory. And that will be at a facility that is similar to the UK Battery Industrialization Centre. We have a framework agreement in place with them. And at that point, we'll have reached manufacturing readiness and be ready to transfer into that facility. Once we've started producing cells at a commercial scale and a commercial rate at that facility, we will then flip into a licensing model and transfer the technology to a manufacturing partner for production at giga scale. We think that the initial markets that we'll address will actually be in consumer appliances. I mean, it's very attractive to be able to think that we'll be showcasing technology in performance vehicles made by some of the performance car manufacturers. But ultimately, in order to generate significant revenues, we expect actually that we'll also be producing consumer cells, which frankly fetch a higher price on a $1 per kilowatt hour basis, and therefore also actually a higher margin. We've had some great interactions with companies from the health and beauty sector. So there you see some hair straighteners that are fitted with our solid state cells, e-cigarettes, also power tools and cameras, which are some of the biggest markets for consumer appliances right now. And also those medical sectors that need batteries that are bigger than Stereox is able to fulfill. So these are our annual results, and so I'm going to hand over to Steve now, and he is going to talk you through the headline numbers.
Thank you, Graham. Yeah, we released our annual results this morning by a regulatory news service at 7 a.m. So I've tried to distill the sort of 50 pages that were released there down to 2 pages of highlights. The first is turnover, 2.3 million this year relative to 2.8 million last year. Now that decrease is partially down to an impact from COVID. Some of our grant programs have been extended so that they've carried forward into this financial year. And we also had an effect of a pilot line shutdown at the University of Southampton, where we have some facilities. That closed in March last year and into June, so the front end of our pilot line sales were impacted by that. There's also another factor, is that as Stereox technology has now matured beyond the R&D funding that historically we've been able to achieve, that's meant that there's less grant revenue available for that. So the grant revenue that we had is largely associated with the Goliath format of cells. So we've got 3 large programs running, one called Power Drive Line, one called Moses, and one called Granite. And each of those, as I say, was extended into this financial year. We're still investing heavily in the technology, and that's resulted in an increased loss for the year. Some of that's down to an increase in a share-based payment charge, which is actually added back when going through reserves, and the other is another non-cash item of an increase in depreciation charges. We're continuing to invest in the facilities. So the overall EBITDA loss was a slight increase to 2.3 million from 2.1 million last year. We, as Graham mentioned, raised money for the manufacturing facility for Stereox last year. That resulted in an increased number of shares, so the average loss per share is actually down from 2.9 pence per share last year to 2.5 pence per share this year. And we still retain a lot of the cash that we raised at that point on the balance sheet. So we had about just under 10 million at the period end. On the next slide, I'll just give a quick overview of how that cash has been spent. So we started the year with 15 million, which was largely associated with that fundraise last year. We've invested in facilities and in development costs of about 2.8 million. There's the operating cash outflow, which has remained relatively constant over the years, about 2.2 to 2.5 million, so 2.3 this year. A small working capital movement, which is offset by R&D tax credits. We're still eligible for receiving those, and in fact, with the development expenditure that we've got, it's likely that will increase slightly in this financial year. And that's the analysis of the cash.
Thanks, Steve. So just to wrap up with an outlook, we believe that the company is very strongly positioned to progress the scale-up of Stereox through the fab implementation that we've just reviewed, and also to mature the Goliath technology with the partners that are working with us through a set of very well-defined technical milestones. And of course, both of those technologies will provide us with the opportunity to pursue significant revenue growth going forward. Thank you.
Graham, Steve, thank you very much indeed for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. You'll receive an email when that's ready for your review. And I'd also like to remind you that your feedback's important to the company, and immediately after the presentation has ended, we'll redirect you for the opportunity in order that the company can really better understand your views and expectations. Graham, Steve, investors had the ability to pre-submit questions, and I propose that we start with those. The first one reads as follows: what initiatives are being taken to market your batteries to medical device and Internet of Things manufacturers? Has anything been tried with rail companies on monitoring wheels and bearings?
Yes, thanks for that question. So, we've identified and engaged with specific segments within the industrial IoT and medical device sectors. For industrial IoT, like we were talking about in the presentation, these include wafer sensing applications in the semiconductor industry and condition monitoring of applications like wind turbines, process plant, and infrastructure. Regarding your specific question on monitoring wheels and bearings in rolling stock, there are other technology solutions, I think, such as large energy harvesters, which are probably better suited for this application. There's quite a lot of energy actually in wheels and bearings when the train's moving. And so you can harvest that with some quite large devices which have been successfully deployed in that context.
Thank you very much indeed. The next question reads as follows. What is the current energy density of your Goliath cells, and how do you plan to get above 400 watt-hours per kilogram?
Yeah, so solid-state battery technology generally, is currently in the development phase and has an energy density below the state-of-the-art lithium-ion cells that, the best ones can deliver in the order of 280 watt-hours per kilo. However, we eventually expect to be able to exceed the 400 watt-hours per kilo as we move up the technology S-curve. We expect to intercept and move beyond lithium-ion as early as next year in 2022. And this will involve optimizing relative thicknesses of the layers and formulation of the cell electrodes, as well as eventually as mechanical stacking and bipolar designs.
Thank you very much indeed, Graham. The next question reads as follows. Tesla Model 3, Model S have a range of approximately 300 miles. What approximate range improvement would you anticipate if the Goliath battery was used?
Well, solid-state pack designs are expected to deliver about twice the gravimetric energy density of traditional lithium-ion, which means that the same weight of pack will give you twice the driving range.
Thank you very much. And I guess the final pre-submitted question, if I may, reads as follows. Could you provide details on your selected chemistry and processes, particularly in relation to other key competitors such as solid power? What is your competitive advantage?
So we use an oxide-based solid-state electrolyte, and we use silicon as the anode. The chemistry of some of our competitors' technologies is not fully disclosed. So, the quantum Scape solid-state electrolyte is not generally known, but they do use an anode-less design, which involves the plating of lithium metal onto the surface of the negative current collector during charging. Solid power are understood to be using a sulfide-based electrolyte. They were originally using a lithium anode, but they recently announced that they intend to switch to silicon like we use. I'd say that our competitive advantage stems from our knowledge of successfully making miniature Stereox batteries, and that leads to an understanding of how to deploy a silicon anode, as well as managing interface resistances, how to design composite structures, and scale up the manufacturing processes.
That's great. Thank you very much indeed. Graham, Steve, obviously, if I could just ask you now, if you would be so kind, just to open up the Q&A tab. Obviously, you'll see a number of questions there from investors, and thank you to all of those investors that have taken time to submit questions this afternoon. If I could hand back to you, Graham and Steve, and if I could ask you to read out the questions and where appropriate, give a response, and then I'll pick up from you as you finish. Can you see the Q&A tab? It's on the right-hand side. There may be a little button at the bottom that's got a blue button at the bottom to open it up.
Yeah, so we're just having a look at these now.
Excellent. Thank you very much indeed.
Very good. So we've got a question from Raymond F, who says, what's the endurance, so number of cycles, compared with conventional lithium-ion? So I'd say conventional lithium-ion cells typically can deliver about 1,000 cycles. And, there is an expectation that solid state will improve on that up to about 3,000. We currently see that level of cycling performance from Stereox. And as we further develop Goliath, we expect to get up to about that level. So a question from Paul R, who says, other companies like QuantumScape and Solid Power have massively increased disclosure regarding the technical performance of their technology. Can ILIKA share more information on Goliath technical performance? This might reduce speculation and share price volatility. Okay, so there's the front end of some technical information that we have disclosed in the presentation today, and we will continue to do that as our technology matures. As more and more information comes into the public domain, hopefully that will give investors more comfort about the maturity of the technology. And we've got a question from Adrian. Who are your competitors in IoT and MedTech? So I would say that there's a number of different solutions actually to providing power in IoT. I would like to argue that actually we've chosen applications that are particularly suited to the robustness of our solid state cells. So we typically try and choose hostile environments in which to deploy our Stereox cells to avoid any head-on cost comparison with standard lithium-ion button cells that might be used in IoT. And effectively, if you can currently use a coin cell in order to power your sensor, then you probably should do, because they're at a lower price point than our Stereox cells. And then in MedTech, there are incumbent MedTech battery manufacturers, the likes of Great Batch and Eagle Pitcher, that are well known for making cells for these applications. There is a lower limit to the size of these cells, below which you tend to get more can than active materials. And this is the sweet spot that we play in. So we make sure that actually, the miniature devices are the ones that we're targeting. There's another question from Adrian here. It says, do you foresee a potential shortage of raw materials for EV batteries that might slow down their adoption? I think my view on this is that actually there is an abundance of elements like lithium in the Earth's crust. There are substantial reserves around the world. At the moment, some of the less expensive reserves and most accessible reserves are being exploited first. You hear about the high altitude evaporite deposits in places like Bolivia and Chile. And there are substantial mining investments being made globally in extracting lithium. So I don't see that as being a problem. Historically, cobalt has been a mineral of concern because the deposits of cobalt are concentrated in the DRC, and there's been some concern about human rights abuses, in particular child labor from artisan mines. But there are some very big and reputable mining companies that are now active in the DRC that can give provenance certificates to demonstrate that no children have been exploited in the mining of the cobalt that's put into the supply chain. So that's being increasingly well regulated, and also actually a number of cathode developers are moving away from cobalt-rich formulations and moving to materials that have a much smaller component of that in them. So, solutions like the eLNO materials that Johnson Matthey are developing. So Paul says, has Goliath been subject to any external, e.g. OEM testing? So yeah, so we've been working together with Honda and McLaren and JLR on those 3 Innovate UK funded programs. And as part of those programs, those OEMs have been given samples of Goliath cells and have put them through a rigorous evaluation. Adrian says, generally knowing what you know now, what might you have done differently or better in the last couple of years? That's like a sort of note to my teenage self, isn't it? I would say I wouldn't actually have probably changed the decisions that we've made around Stereox, although perhaps given the benefit of hindsight with COVID, I might have chosen to manufacture Stereox ourselves from an earlier point in time. We spent quite a bit of time last year and in the run-up to last year looking at different third-party manufacturing facilities, thinking about how we might outsource that manufacturing. I think if we committed to our own manufacturing facility a bit earlier, we would have been further advanced. But then again, sometimes it's a bit easy to have 2020 hindsight. Steve, would you add anything to that?
No,
any decisions you think we should have done differently?
The only one that we would have potentially accelerated, albeit that had we done that, we wouldn't have got the facility that we've got currently, which is actually only became available at the start of this year. So I think it could have gone either way.
Yeah. All right, let's have a look. So Jonathan says, appreciate these things can't be rushed, but how does your time frame to manufacturing and gigafactory meet with end user demand and competing tech? Well, I think it's true actually that if we could manufacture our solid state cells in a gigafactory now, we could definitely sell them. There's a massive demand for solid state and the benefits that offers. I think we're going as fast as actually our capital constraints will allow, and I think we are looking to see how quickly we can scale up. I think the plan that we've got now is a low risk plan for investors, which will get us to that end goal as quickly as can be realistically done. Adrian's got another few questions here, so let's have a look. First one is, who do you consider as competitors to EVs? Well, I think there's a leading cohort of solid-state battery developers in the sort of global competitive landscape. In terms of the independent EV developers, you would probably put QuantumScape and Solid Power, as well as Solid Energy, or SES as they're sometimes referred to, Prolodium in Taiwan, Ionic Materials in the US, and sometimes Hydro-Quebec get included. So that's a Canadian-based technology provider. And of course, then you've got the large incumbent battery manufacturers who are also active in this sector. So Chinese companies like CATL, LG Chem in Korea, and also Panasonic, of course, and Samsung. Next one from Adrian says, how long will your cash last? And when might you expect to undertake another fundraising? Steve, do you want to deal with that?
I'll take that one. Yeah, so our accounts, as I say, were released this morning. In there, we've got just less than £10 million on the balance sheet. As part of the audit sign-off, they've satisfied themselves that we'll be sufficiently financed for at least a year from the date of the issue of the accounts. So that gives you one benchmark. On the fundraising side, we've certainly raised sufficient capital with the fundraise last year for the scale up of Stereox. We are looking at Goliath scale up plans, and that would be a mixture of grant revenues from Innovate UK, potential strategic partners, and also in the mix, potentially shareholders as well. The next question, again from Adrian, is who are your largest shareholders? Well, details of our significant shareholders, i.e. those over 3%, are shown on our website in the investor section. They're also in the accounts release that came out this morning. But if I just give you some of the sort of household names, you've got all have got around 5 or 6%. You've got Bailey Gifford and Co, Herald Investments, Schroders PLC, Janus Henderson Group, and Parkwalk Advisors, who are part of the IPO group. So each of those are around 5 or 6%, like I say.
And maybe GPAM is our biggest
shareholder. Yeah, sorry. We've got just under 10%.
Yeah, we should definitely mention them, given how loyal and supportive they've been over the years. And see, we've got a question actually that's had an additional vote. So that's John B. What's the largest addressable application ILIKA has identified for Stereox so far, and how big is that market? So, this is a very interesting question, and I think the answer is probably in the medtech sector. I would say that it is the orthopedic application that I was chatting about as we went through the slides earlier. Of course, there are a huge number of hip and knee replacements around the world, not least in the US, which is the biggest market for medtech sales. And that would easily consume our entire installed capacity at the Stereox fab. So that could very well be a licensing opportunity going into the future. Right, let's have a look. Adam C, any more grants from the UK government? So, we announced the collaboration that we've got with Comau, which is actually our latest grant. That was £500,000 funding. We've sort of graduated a bit from Innovate UK, and our technology is becoming more mature. I think the APC, or the Advanced Propulsion Center, has been particularly supportive actually of our efforts to scale up to a larger commercial scale, and we expect that there will be some further support for them as we move through increased capacity of our facilities and into, for instance, the UK BIC and beyond. Next question from Peter says, how does ILIKA Goliath technology stack up against the Nissan battery technology to be built in the UK? And will Goliath EV still 2 or 3 years away in R&D? Sorry, with Goliath EV still 2 or 3 years away in R&D, there is the possibility that others may be ILIKA to the EV prize, ! Right, so the situation with Nissan, of course, is that they get their battery supply from the AESC Envision facility. So it used to be owned by AESC, which is a Japanese battery manufacturer, but they were bought by the Chinese company Envision. Historically, that company has imported preformed electrodes, so cathodes and anodes, in rolls from where they're manufactured overseas, and has assembled cells and then sent those packs across to the Nissan factory. That is, traditional lithium-ion capability. So this is what we'd call, the technology. So, the Goliath technology is really the next generation relative to that. And, that is the type of technology that most analysts in the sector expect will be replaced by Goliath when it matures. So we're not really in a race with the technology that's going to be deployed in that factory. That Envision AESC factory is is very much a factory that's being built for immediate demand of EVs, rather than being on the same development timeline as our technology. And then Amos says, what's the business relationship between ILIKA and Faraday Future? So, we have worked with the Faraday Battery Challenge. We've had £5 million worth of funding from that organisation, which of course is really a government-funded organisation. So we're in constant dialogue with them and the APC and BAYS, and looking for ways in which we can continue to align our business interests with government strategy.
Yeah, the next one's from Sam M. You indicated in today's RNS that you might need equity financing to scale up Goliath. If you do in fact raise more equity, will you give a route, e.g. open offer, for existing investors to participate? Yeah, we always value the private investors that maintain the majority of the liquidity in our share price, and so we have historically always made an open offer available, and we would foresee that that would be the case in the future as well.
Thanks, Steve. So a question from Simon. How do you view your market cap versus QuantumScape? I think the short answer is smaller. I don't know what we are today, but generally my rule of thumb is that we're between 2 and 3% of QuantumScape's market capitalization. So it seems like a bit of a bargain at prevailing prices. Jonathan says, what has caused you to wish to accelerate the Goliath program, and what's involved and how much will it cost? Well, I think it is a bit of a global race. I don't think you have to be first to market in order to capture significant value. But I think you have to continue to be in that leading cohort. And so we're looking at ways, as Steve mentioned earlier, to make sure that that program remains adequately funded and we're able to meet the demands of our customer base and provide them with samples and confidence, actually, that the technology is going to continue to mature at a rate which will support their product rollouts in the coming years. So Adrian says, if all goes to plan, in which year do you expect to first receive revenue from EV batteries? So I think Steve and I'll do a double act on this. I mean, we assume that we will secure the funding that allows us to complete the development of our Goliath technology. And if that goes to plan and we can transfer the technology into a mega factory like the BIC, then we would expect to start generating significant revenue from that facility in 2025, right, Steve?
Yeah, I'd just add that even in the development phase, we will be looking to sell those samples for evaluation throughout that development period. So it's significant revenues, admittedly, when you get to the mega scale, but we will be selling a significant premium, the prototypes that we'll be developing for those.
Yep. So Christopher M says, how much shareholder capital will you require to execute this plan, and when is the crunch point for cash? Steve, do you want to handle that?
Yes, as we say, the Stereox part of the business is funded. We can see that through, so that it'll be generating cash and providing positive net contribution to the business. For the Goliath side, we'll obviously only undertake the program once we've got it funded. If we've got the funds continuing for the moment from Innovate UK, we're looking to renew those, and as we mentioned earlier, potentially a significant strategic shareholder and some potential shareholder funds as well.
Okay. John says, when do you anticipate being profitable? I think that question is probably best answered just by looking at it in the context of the Stereox business, because that's the one where we've got the most visibility on the intensity of the investment required and the ramp up of revenue associated with product sales. So, Steve, just remind me what the guidance we're giving on that.
So we're ramping up our sales from the Stereox manufacturing line once it comes on at the first quarter of next year, and then it'll be generating as we ramp up. So probably over an 18-month period, we'll be up to revenues of about 12.5 million from that facility,
and that will generate a cash flow break even and profitable point from that point on for that part of the business, right?
That's right.
Right, let's have a look. Next one from Richard. Do you have any relationships, research as well as finance, with Chinese government? If not, do you envisage any future relationships? So we do have an open dialogue with a number of Chinese potential partners. We don't have any contractor partners or Chinese government links at the moment. We have got a business development director who is active for us in China. They've become a globally significant Chinese battery technology developer. And it's important actually that the connections that we've got there enable an open conversation. So I'm not going to rule that out at the moment, but right now we don't have any contract relationships. So Matthew says, you state that miniature cells are the sweet spot for medical equipment. What percentage of the market does this represent? So if you mean what percentage of revenue opportunities does this represent, then it's about half of our revenue opportunities for Stereox that we're likely to address. And in terms of overall percentage of the medical market, this is a very small percentage given the colossal sizes of those markets. So David says, in light of the mentioned disclosure of technical details from your US competitors, how do you see ILIKA compared to them in terms of performance and technical readiness? Well, I'd say that technical disclosure isn't totally complete from our competitors, but what information is out there allows us to take comfort that we're still in that leading cohort of solid-state EV battery developers. And I expect that, provided that the funding is forthcoming to support the Goliath program going forward, then we'll remain in that leading cohort and we'll be able to capture the value that Goliath is reflecting. Jonathan C says, do you see Nexion as a major competitive threat? So I think the short answer is no. I mean, Nexion is well known to us. We have an open dialogue with them, and they are, of course, a silicon anode developer. They've been marketing their technology into the traditional lithium-ion market for a number of years now, and they're not a developer thing that we are.
Graham, I'm mindful that you've been very generous with your time, and we are coming up to the hour. For every question you seem to answer, there seems to be another 2 coming at you. So we can obviously perhaps take some of these questions and present them to you offline. But just mindful of time, if there was anything perhaps left that you felt that we hadn't covered already, and then perhaps I can, as I say, ask you to wrap up, and then we'll redirect investors to feedback. And as I said, we'll publish responses to all of these questions where it's appropriate to do so when the meeting's finished.
Very good. Well, maybe one final question, perhaps, from Adrian, something different here. It says, how easy is it to find the right quality of staff as you expand? I'd say it's not as bad as you might imagine. I think we continue to have strong links with the University of Southampton here, which has got a fantastic electrochemistry skill set. And there's been a steady stream of graduates that we've been able to employ that have helped propel the company to where it is today. And we've got some great hires from Europe and North America who are continuing to help us move forward. So I'd say, of all of the challenges that we've got, actually getting the right quality of staff is probably not one of the toughest challenges.
Although it has been made slightly more complex with some of the new rules that we have for needing licenses from Europe. So that has made it a little bit extra.
That's true. Yeah, we have had to apply for a license for visas for some of our most recent hires from Europe. So it's not quite as easy as it once was.
Graham, Steve, thank you very, very much indeed. I know investor feedback's important to you guys, and I will shortly redirect investors to provide you their thoughts and expectations. But I guess before doing so, Graham, if I could just hand back just for a few closing comments, that would be very kind.
Thanks, Mark. Well, I'd just like to thank all of the people who have taken the time to join this presentation and submit questions into the Q&A. We really do value the interaction, and we value all of our retail investors. And I'd like to wish you all a pleasant evening.
That's very great. That's very good. Thank you very much indeed to both Graham and to Steve. Could I please ask investors not to close this session, as you'll now be redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ILIKA PLC, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all.